Well, we got it. The Fed meeting, along with the summary of economic projections and the expected 25 basis point cut. As per the summary of economic projections, the GDP numbers looked very good. And then also the unemployment seemed to be fairly stable. And then when we talk about inflation, also seemed to be subdued. Well, one problem that the market probably wanted more of was further rate cuts throughout 2026 and 2027. And Jerome Powell, when he came out and gave his commentary, there was talk about a lot of uncertainty, ready to make further cuts whenever they needed to. So even though it may have sounded like he had some concern and he didn't have the super hawk overt tone to him, I don't think that the Fed came out as aggressive as the market wanted it to be. It didn't want it to be overly aggressive, but maybe a little bit more softening through 2026 to be seen. That way it would match up a little bit more with what Jerome Powell was saying about the labor market. Even though we don't have signs that the wheels are falling off the wagon as per the economic reports, there still is that delayed data. And then he even said some of that is going to be skewed significantly from what we would normally expect because of the government shutdown and the way, and he kept on using the word, the technicals that happened to be, or the, I can't remember the exact wording of it, but it was the technical structure, the technical factors that go into such calculations. So that's what we got from Jerome Powell. And the market generally seemed to receive it pretty well at first, and then we saw some softening in some other areas. So we're going to look at the SPY, the Qs, IWM, and Bitcoin on a weekly basis. And then I also want to toss out Netflix because I think it's important that we take a look at it and also give some further commentary on the quantum stocks and the penny stocks I've been talking about and what we can expect to see from them in general based on what we see in the markets as well. So let me put this up here for you. This is SPY. Tracking the S&P 500. And the thing we want to pay attention to, let's actually drop out to daily real quick. I've talked about this before. This isn't necessarily a bad look, but what I will tell you is that we have, let me see what technicals I have on here. There you go, 689.70. We pretty much need to sit on top of 689.70 in order for that further climb to happen. The volumes are ticking up a little bit, but still below average. Until we get on top of 689.70, it's going to be hard to say party on Wayne, party on Garth. So we absolutely want to be watching for that number. On a weekly basis, what are we looking at? Well, the thing that I'm looking at the most on a weekly basis is the RSI. The fact that we've put in a pretty decent climb price-wise. That's the volume. Here's the RSI. Even though these prices are climbing up through here. Hello, Benjamin. That's my cat. He's pretty noisy, and I apologize. We can see the tapering of the RSI here, and that we're starting to trade below the 14 period moving average that we have on here, which is in yellow. The purple is the RSI itself for each closing week that we have. And so far, it's been falling across the tops and the bottoms while we have the prices climbing up in the SPY. That's a bearish divergence. And while we're near something like a double top, if we fail to break that neckline, then we could sell off a little bit more. So that's something that I'm aware of and something that I'm watching for. When we go to the Qs, there we go. Give it a moment because I clicked around a little bit too much. There we go. We can see a little bit more of that same divergence. Let me bring that up there. We also, by the way, made a low volume climb the past 2 weeks, and we'll see how this week finishes. If it's also going to be lower volume relative to what we had in the past, which can show a lower conviction rise. And the Oracle earnings last night didn't really help anything either. So what we see again is that we're starting to see that same divergence here as the prices move up on the chart that's up here. And I know it's kind of squished for us. We can stretch it out for you a little bit. We don't see the same divergence that we saw with SPY, but I will say that the market, what it's going to chase is the least risky move. And so near the top like this with a lot of uncertainty, the least risky move could be to de-risk, to sell downward, and to move in temporarily a short-term bearish direction. That doesn't mean an overall bearish sentiment for the markets because we don't have the technical signals to substantiate that yet. So just to be clear, this would just be a temporary thing. So IWM, we actually see once again that tapering down of the RSI, which honestly this one did break its peak. So instead of the triple top, we actually are above the triple peak. We'll talk about that in a moment, but you can see the prices moving up, and you can also see from there we have the momentum moving down. If we drop out to a weekly basis, daily chart from that, you can see that triple top that I was talking about that goes back to Wednesday, October 15th, and then on the October the 27th, and then throughout here, we'll call that all one peak. That happens to be from December the 4th all the way up until December the 9th, finally breaking through that yesterday, probably trying to capitalize on just whatever extra it can before it finishes its move. Now, we are overall in bullish territory. I would just want to keep on being clear about that. As long as we're above the 5, the 13, the 50, and the 200, that's a very bullish setup that we're looking at. That doesn't mean that we can't have some sideways trading. That doesn't mean that we can't move down temporarily. And we do actually have a fair amount of room to move down for de-risking, which could lead to an even more significant sand and rally to follow. So I think that the mixed tone that we got from Jerome Powell with the not dovish enough, but also not overly dovish, and to like too extreme for the rate cuts, I think that there was something the market just wanted a little bit more of, maybe 50 basis points more of cuts over the next 2 years, and the market just didn't get that from it. And so overall, not a bad meeting, but definitely with some concerns that are in there that's going to put extra emphasis on those economic reports that we have coming up. Now for Bitcoin, on Bitcoin's weekly chart, something we want to be aware of, the RSI is down in bearish territory. The 5 has crossed over the 50. That 13 crossing over the 50 is a further bearish sign. Plus, we also got a rejection off of that 5-week EMA, the 5-period EMA that we have here. And seeing that rejection like that, this thing could push lower on us. We need to watch for it. If we want to see what it's currently doing, we can go out to a daily chart. And something important here is the fact that we are an ascending triangle pattern and we are sitting right at support right now. So if we're able to break this top trend line, that could potentially send us all the way back up to the 200-day to check out and see if we can pass through that as resistance and turn it into support. Same thing for this 50 EMA. Now, mind you, this is that bearish structure that we're looking at for the moving averages, the 200 above the 50, and then the 5 and the 13 kind of tangled up right now as we kind of sort out which direction Bitcoin's going to go. The RSI is down below 50, so it has bearish momentum currently. On a monthly basis for Bitcoin, where do we find ourselves at? We find ourselves at a huge moment of indecision. So this is important to watch how this candle forms up right now to see how it gets shaped for us. We also have that 5 potentially going to cross down over the 13, which would be a bearish sign for a temporary standpoint, a near-term standpoint on a monthly candle. So when I say near term, that would be over the next several months. We could see that, but we have that 50 EMA, which if we do get down there, I said this before, I think that load up zone is that 64 to 74,000 for Bitcoin if we should happen to get down that low with it. And once again, I know that this sounds like bearishness. It's not. What it is preparedness. So just in case we happen to move south like that, I want to be prepared to take advantage of that move south through the use of things like options plays, especially put option plays, whether they're used for trading to take advantage of the premium or if it's used as a hedge against long-term positions. Either one of those things could be good for. If you want to learn more about technical analysis, about the options trading, about crypto itself, there's some links for Stockmo Academy. There's a link for Stockmo Academy for those courses. Code word doctor gets you a $400 discount. Bundling the courses gets you a bundle discount on top of it. And then also there is a link as well for the Stockmo Discord, which I'm one of the panel experts over there. You can come on over and join us and get support in your journey towards financial freedom, being alpha in your portfolio. So I did say that I would mention Netflix and I would talk about the penny stocks and the quantum stocks. And I'll summarize it this way, that the riskiest assets for quantum stocks and for the penny stocks, the riskiest assets are going to be the ones that suffer the most. But in the times when we are in that full-on bull run, that we reach those critical support moments and we start to get that reversal coming in, that's when they also move in outsized ways. So the quantum stocks had a little bit of a rough time yesterday, and we want to see the market choose a direction so we can be a little bit more certain on how they're going to be influenced as well. Now for Netflix, the numbers to watch are 89.10 up to 91, getting a little bit of a bounce from yesterday, and this is all about that Warner Brothers Discovery deal that we have going on. Netflix owners do not really care for the idea of buying that. They think that it might be something dead weight or overextending themselves, and so we see that sort of sell-off. So that means that if that merger doesn't go through, or I'm sorry, that acquisition does not go through, then that would be something that could be some upward pressure on this. Now, mind you, there's an even better number down here at about 75. So we see the support over here at that 89 to 91. 75 would be absolutely enormous, all the way down to 69. So the major load up zone for Netflix, if we don't find the support here, which could push us pretty darn soon back up to 108 to 110. If instead we break that support and turn it into resistance, 75 down to 69 are the numbers that we're looking for that next major load up zone for Netflix, which I think is going to turn into one heck of a play when we start seeing the signs of the reversal coming back around. So Netflix should be one of those stocks that you're watching now. Guys, I'm going to let you go. Remember, check out those links. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.